So as long as you guys can hear me. But thanks again, Morgan, for having me. Yeah, Morgan and I go back for a while, and he is a good friend. We're actually both roots from Alabama, so that kind of makes it nice too. I'm just trying to get set up here, so bear with me. I'm not as used to this platform, so it takes me a second just to get organized. Yeah, so I'm in Austin, Texas, and basically my background, I've been in trading for over 30 years. And I started out trading cargoes of crude oil back in the 80s, worked for a company called Coastal Corporation, which I don't know if you know who they are, but they eventually turned into El Paso, and we had refineries all over the world and did a lot of crude trading, you know, just whatever crude there was, I pretty much have probably bought or sold it. And so that's kind of where I started. And then I went on from there and went to work for one of the largest oil trading companies in the world, and ran their international crude oil trading out of Bermuda for over 10 years. And it was during this period of time that I really cut my teeth and started trading all the other various derivatives and commodities. We were one of the first groups to trade over-the-counter options on crude oil and futures, and we eventually evolved into trading just big amounts of Forex, foreign exchange, all the different futures markets, all the various bond markets, just wherever there was liquidity and price movement, because we just evolved from just strictly trading crude to trading all the other commodities. So, you know, if anything, if you have a number, it can be traded, right? If it moves, the old saying, if it moves, you can trade it. And so that's kind of basically what happened with us. Let me just get the general chat. Okay. Okay. So basically what I wanted to go through here today, since you know, this is a Trade-A-Thon, I wanted to just kind of go through kind of a progression of what we look at powercycletrading.com. And the first thing we do, you know, we have a trading room and we day trade. And our day trading is pretty much, it started out day trading pretty much options on stocks. And primarily we started trading options on Apple because of the great bid offer, tight spreads there, good liquidity. So that's kind of how I first started. I saw a kind of a need in the marketplace. You know, there was a lot of day trading going on, but there wasn't as much option activity. So I started doing a lot of options, which that's kind of my background too. I started trading options back in the mid 80s, you know, on crude oil. And then in 2009, I set up a over-the-counter crude oil option brokerage desk for the largest privately owned oil brokerage company in the world called PVM Oil. And so it was a really great experience. But anyway, so I've always loved options. And so I'll go through some option stuff with you here today. But the first thing I wanted to do was introduce myself. And then I'm also going to do a little raffle here, which is always a lot of fun. So 1 second. Just bear with me another second here. And I'm going to put up this little slide here. Here's my ugly picture. And start out, I'd like just to put out the old following disclaimer that the following webinar here today is purely educational. Any stocks or futures do not constitute advice and should not be construed as recommendations. So here's a raffle. What we're going to do is have a little bit of a raffle here. So I'm going to give you the link, and you can put it in. And if you're interested, just send me your, you know, just put your name and your email address. And what we're going to do is very towards the end of this, we will raffle off. Let's see, can I put that in there? I'm not sure if I can do this. If you could put in, let's see, can I put this in somewhere? I don't see that I can actually do that. But anyway, the raffle will be, if Morgan, you can put it in. It's Power Cycle Trading, www. It's just powercycletrading.com RAF. Okay. Oh, Yana sent it to me. Okay, I'm going to, okay, share the link in the general chat. Oh, I see. What? Well, yeah, there it is. So just stick your name and email address in that, send it in, we'll have a drawing, and basically what you'll get is my Power Cycle trading course. You'll get your choice of whatever. We have 3 different courses, which pretty much outlines and shows you the trading system, how we use this system I'm going to show you today. It's a manual with videos and everything else, and you'll also get 2 weeks in our virtual trading room and go from there. So, you know, fill that out and we'll do a drawing. So that's the first thing I wanted to put out there to you guys. So one second, let me take this off. So what we're going to go through here today is I'm going to show you, you know, basically the trading system that we use, and this is what we incorporate for our day trading and for any of our swing trading or longer term trading. So what you're seeing here is, let me just click this off, and yeah, okay, sounds good. And what you're seeing here is just a breakdown of our model. I'll just enlarge this screen here. This is the NASDAQ 100 futures, and we've kind of shifted over to trading futures just because the liquidity is so good on the futures. And I like the NASDAQ futures. You know, really a lot of good movement, and it gives you a lot of good setups during the day, and really, you know, obviously deep, tight spreads. So that's the reason I pretty much trade it. Now, you know, we can, with this particular model that we use, you can trade whatever you like. If you want to trade the ES, S&P futures, or any of the other indexes or exchanges or the stocks, you can. But I tend to, you know, in trading, you need to find something that you like that has a rhythm that kind of fits your style of trading. And if you're a day trader, you need to actually always paper trade or, you know, simulate your trading first before you jump into doing actual trading, because there are certain contracts that may not fit your style or your personality, put it that way. So I like the NASDAQ 100. It's got what I call a rhythm to it that I like. So, you know, basically when it moves, it'll move in, you know, 1 to 2 to 3 points. Each point is worth $20 a contract. So each tick is $5. So, you know, we're going to trade for, you know, 8 to 12 ticks, you know, so anywhere from $40 to $50 to $60 a contract for a move. And, you know, you do that a few times a day, and, you know, it adds up. So that's basically, you're looking here at, this is a 200 tick chart. So we'll use multiple time frames just to confirm, you know, to give better confirmation to a price move. And then the system, we have our lower studies down here and our upper studies, and we've have this modeled so, you know, we can see when there's, say, volatility compression that starts and when it's over, and then we have various major support resistance levels in here based on prior day's close or prior day's high, opening range. You know, we have opening range support resistance also in it. Now the other thing, you know, if it's a lot of lines, you think it's very confusing. Well, you know, after you look at it for a while and understand what's going on, it's not that confusing. So you can also take off any of these indicators that you don't like as well. So we have it color coded, so whenever a moving average, you know, changes and slope is up, you know, it'll change colors. Now this is on, we have this coded for Thinkorswim, and now Thinkorswim is a free platform, so if you have access, you know, you just open up an account at TD Ameritrade, and you can download their platform, and you know, they'll let you use it non-funded just to see if you like it, and it's a really fantastic platform. So that's what you're seeing here, and this is, you know, NASDAQ 100 NQ, and this is, you know, right here, this white line is a pivot, you know, a pivot based on the prior day's trading range. And we can base a lot of our indicators and support resistance based on a, you know, on a pivot. So you can see how strong this becomes as resistance. So you can see where the price action came in here at 952 Central, came up into this pivot, broke above, came back down. Now this is an engulfing candle. Here's another engulfing candle. So it triggers and it shows these type of indicators to help you identify a potential trade setup. So and then you can see the background change, and that's also based on different parameters and different things happening within the system. So when it goes green, it's showing that it's a potential to go up. When it goes black, like you just saw it, it's kind of a neutral doing nothing. And we'll also even have it turn red when there's certain things within our model that says maybe it's going to go down. And then we have our lower studies that are based on various momentum indicators with our own settings that we've put together that tend to work better than other settings that we've looked at. So spent a lot of time on this, over the years, putting together a model that I like to trade. And I initially started out just using it for swing trading, but if you have a decent model, it should work on any time frame and across pretty much any asset class. So you just have to try it out and see how it works. So you can see here, this was a pretty decent little short right here. It came up into this major resistance and then broke down through these moving averages, came down. Now this is the prior day's close, so this is all automated in there and gives you support levels to look at. And then here's, I'll also look at hourly ranges. So here's an hourly range here. So this is a midpoint of an hourly range. And you can see how it came down here and just pretty much nailed it. And then an engulfing bar there. Our lower studies turn back up and boom, up she goes. And, that was good for, depending on where you got in, but, here was your prior's close. So if you got back in, waited for the close to break, that was 36.54. And it went right back up to the pivot at 59, so that was good for 5 full points, or that was over 20. That was $100, over $100 a contract. So that was a pretty quick little move. So this is the 200. Now what we'll do is we'll incorporate that and look at multiple time frames together, just to give us added confirmation. So you can see here. We've got, I will usually trigger, what I say trigger is I'll enter my trade based on the 200 right here, and then the 400 is kind of my overlay, fractile, I guess you could say. And I'm also always focused on the 5 minute. The 5 minutes, a very important intraday time frame. And the 5 minute, one of the main reasons 5 minutes is such an important, it's the first data stream or whatever that started being collected when futures came out, and the shortest futures time frame when futures were first introduced was a 5 minute time frame. So there's a lot of data going back to show 5 minutes. So the 5 minutes still, for a lot of various timing models and high frequency traders, is still very very key data stream to be focused on. So I use the 5 minute time frame as my intraday overlay as far as is the trend up or down. So right now you can see my indicators have turned back up. We had an engulfing candle here on the 5 minute. So right now the intraday trend has shifted back to the upside on the NASDAQ 100 futures. And then you can see here, you can see the crosshairs line up. So right when that 5 minute was turning up, my momentum indicators had shifted to the upside, turned green. And here you can see my other lower study indicators were all up, breaking a moving average. That would be an entry point right there. So a lot of different ways to play this. The main ways that we will look at it is what we call a cycle low trade, where you come in and you're looking for the bottom of the market. You can see kind of how this came down hard, and then the lower steady indicators started turning up. It's what I call a cycle low. And then you had another nice little confirmation here with an engulfing candle, which is also a really great indication on the 400. and you also have that engulfing candle on the 5-minute. So these are two nice, indicators right now telling you that the potential for this price movement is to stop and start cycling back up. But you can see how choppy it is with these bars. So, today's been a very choppy day for trading, but there have been some real good trades earlier. And I'll just put that 200 up just to show you some of the trade setups earlier in the day. And then what I thought I'd do is I'll show you also how we use this model for our swing trading. And then I thought I'd show you an earning trade setup as well today. I don't know if you guys play earnings, but I like to trade earnings after release using options. So I teach a course on that, which is also available if you guys are interested, to teach you the different non-directional trading strategies that I use for earnings. And we'll go through one of those trades. We'll set up the trade here today for Priceline, which comes out today after the close. So I'll do that next probably. What I'll do next is I'll go through our swing trading, our scanner, and then we can set up a Priceline trade if you guys want to see how I do that. And it's a very low risk non-directional trade. And this trade I'll show you on Priceline in a few minutes will be based on price movement and not volatility per se. So just looking back here at the model, so coming in to today, we had a great short setup on the open. Let me show you that. First trade of the day. Go back to where the market opened. Excuse me. So here we came in this morning. So see these two bands here? Well, this is an indication of a compression squeeze when it starts. So that dot starts there. So you can see how the price action gets real tight. And this is, something I love to look for: tight price action, consolidation, and that's what we call a compression squeeze. And then, what I like to do is look for when it triggers and breaks out, and a lot of times you get a fantastic move or momentum to the upside or downside. So here was a nice compression squeeze. It started about 8:18 in the morning and triggered right on the open. So right out of the gate, man, like the horses out of the gate at the Kentucky Derby, it took off. Can you guys hear me okay now? Oh, okay. Saw somebody say you couldn't hear. So you can see here on a compression squeeze, this was, right on the open. The indicators were all up or lower studies showing the momentum had shifted to the upside. And then it was just pretty much off, and it just hugged this this moving average right here. Now this was the short setup. You can see the indicators turning over right here. And then we had the engulfing bar candle. So when I see this, it's time to look for a short sell setup. So, when it broke back below this moving average, that was one entry right there. Or the other thing I like to do is wait for it to retest it again and then short it. So, you had a couple different short opportunities right here, came down here to this pivot, bounced back up, failed and broke the pivot. So what I usually will do is when it comes back down here, this is a major support level here. I'll let it come down, test it. It's like I tell, our members and people that, I'm teaching, is that when you look at a major support level or major resistance level, it's kind of like a tree limb. If you try to cut a tree limb down the first time you hit it, it's not going to usually break. You're not going to cut it down. So when you're trading, what you need to try to avoid and be patient is don't short a major support level the first time down. So here it came down, it bounced, and it just went sideways, came down again, hit it again. So another chop on that tree branch, popped back up, another chop, broke it. Now, a great area to get into a major break of a support is you could get in right when it's breaking, but the better time to get in usually is let it break and then let it retest another time. And then when it fails, you put in your short under, the low of that bar, say right here. And that short was, that's the really good short setup on this particular example. Now my lower studies were all down, all my time frames were down on the other time frames. I was looking at the 5-minute the 400 tick chart. So this was all set up based on the time frames too. But the key here lesson that I wanted to show you to hopefully help you is that you never want to short a support level. So this is a major support level that we use based on the model. So the first time down, never short it. It may not be right all the time. It might have just gone straight through it, but you don't want to short it. You could just put in a buy here for a counter trend pop to the upside, but never short it, then let it come down, start chopping, let it break, and if it's a major support level or resistance level, it's going to come back up and retest it. So see, it finally broke here, came back up, retested, and then put a short below one of these, the lows of one of those prior bars. And that's a fairly safe short. And then you could put a stop above the prior high or adjust your stop loss with whatever you like to use. And these are Hakanashi candles, which are nice candles to use. It shows trend. You can see the tops are unshaven, so when you're getting a good trend, see here the green background, that's based on some of our indicators showing that there's potential move to the upside. So here it's coming back down. So that was a good trade this morning early, and then it chopped for quite a while, and then you had two numbers that came out at 9 o'clock, and that kind of shifted the market back to the upside. But you can see here, as I scroll back through, here's another major support level. Down here, you've got, this is a Fibonacci level, and then here's the prior day's low. So, constantly looking at major support resistance levels to help navigate your trading for intraday trading. So it just kept sliding down, and then around 9 o'clock, you had a number come out, and a lot of times numbers will be a catalyst to shift the market. So today at 9 Central, we had Philly Fed and leading indicators, and that came out and shifted the market back to the upside. You can see here, so another engulfing candle. You can see our momentum indicators shifted back up, and up she goes. So, and then you can see here, I'm just kind of fast forwarding for you, just kind of give you an overview of this thing. You can see another compression squeeze here, and then it breaks to the downside again. So there's a lot of information here. It's a very visual system, and it just, once you get familiar with what we have in here, then it helps you to navigate your trading. So here's going forward. You can see again a nice shift here to the upside. Came back down into the prior day's low. You can see the indicators shifted back up. A nice engulfing bar, giving you another nice potential signal that something big might be happening, and then pop right back up into the prior day's close. Look how, see, this is major resistance. See how it just stopped dead, chopped sideways, and then finally broke. So again, it's like that major tree branch. Don't buy it the first time up. Let it chop through. Let it chop, 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 and it held the moving average nicely here, and then popped. So that was good. That was good for 2 points, $40. So, different ways that you can use this to trade. I mean, you don't have to trade for $40 or $50 a contract. You can, adjust your stops based on a longer term time frame. So just, going back through, you can see how major that resistance was back up here at the pivot, came back down into the close, came back up to the pivot, broke. And now see how it's just hugging that pivot, that white line. So pretty whippy day here today, but it'll definitely help you when you have this kind of visual indicators to avoid some of the chop sometimes as well. So just fast forwarding here, just back through. Now another thing I like to trade is gold, and I like to do that with these compression squeeze type setups. I'll show you that real quick, and then we'll move on. And I think I've got it. How many more minutes do I have, Morgan? 15 minutes? Just don't want to get too pressed for time. until 11:15. You want to look at WTI? Sure. Man, crude's been very strong. Yeah, let's look at WTI here. Ooh, 11 o'clock, we've got inventories. So, but again, you can see this pivot. See how major resistance that is? Look at this chop. So here I can pull up crude real quick. Let's see here. Show you gold real quick. See if there's anything going on with gold. This again is on the 200. Now, yeah, so see here's a gold. Here's a compression squeeze on gold. So what I like to do is, I only like to trade gold when it's in a kind of a compression squeeze right here. And then what I'll do is I like to set like an OCO order, one cancels the other, below a major, on this particular situation, major support level, so right about in here. And then usually gold, you'll get a good, when it breaks out of a squeeze, you'll get a good movement, push down or up depending on the break. And I'll set it for a 10-tick profit stop, and I'll put a 5-tick stop loss, because these things will happen real fast. So that was a gold squeeze earlier. Here was a really nice squeeze. See how long this one was? This started at 7:45 this morning and just chopped based on that pivot. Look, it just stayed there, chopped. And then when the market came in and opened, this is a lot of times when you'll get these great trades right on the open. You can see how it broke out of that squeeze. That was good for 13.13, and that thing just went straight down to 13.12. So that's $100 right there in a blink of your eye. Pop back up into a midpoint and then back down for another $200. So that was very sweet right there. Somebody asked for crude oil. Let's put that in. You can see crude oil right here is in a squeeze. See how tight that is? I mean, it's just not even trading right now. You guys see that? Okay. Okay, so this is crude oil. And this is the April contract. And it's just stuck sideways right here. So major squeeze just developed. You can see when it started with these dots right here. And the forecast for this, well, based on this squeeze, I mean, it could break hard either way, up or down. So when you're in a squeeze, you need to look at your lower study indicators, which I'm looking at here, and they're just flat too. So I'm going to do nothing here. There's no real good directional forecast right now. It's just, I mean, it's just sitting. You can see the lower study indicators that I use for my directional kind of indicator is totally flat. So you can see back here, it turned up. That was what we call a cycle low. But now it's, I mean, it's just not even moving. It's like my data feed is like not working. So there's nothing that I would be doing here. I'd wait. So what I'd be looking for is to have this thing start moving above either this major support level here, I mean resistance, which is the prior day's close and a Fibonacci level, or breaking below this pivot point. And then I would start looking at either short or long. But in here, I am looking at doing nothing on crude, because this is where you get chopped to pieces. You're just working for the broker. You know, you might go long, then you're stopped out. You go short, you're stopped out. So nothing really there. You just have that engulfing bar down. So it looks like it potentially here now it's starting to break to the downside a little bit. But I'd be waiting a little bit further along to get some confirmation to that break, because we're still, you know, inside of a squeeze. And this is a, you can see this is a swing low pivot point right here. So just sitting there doing nothing. So that's on crude oil. Now let me show you the other way that I use this. Now restore this. And I don't look at just one time frame. Again, I'll look at multiple time frames just to give me additional confirmation. So what I'll show you now is what I use for my swing trading, and I'll pull that up. Hopefully. Sometimes Thinkorswim, the only problem Thinkorswim sometimes can kind of get jammed up. Okay. So here I was looking at earlier Priceline. You can see here's my option table. And I'm going to flip this back over to charts. Okay, so here was crude oil. So what I like to do for my longer term trades, I like to look either for kind of a cycle low here. You can see this came back in November. This was on a daily, and you can see had a nice sell-off. And right here, you can see my lower study indicators started flattening out, bottoming out, and started turning. So this is what I call cycle low. And then momentum also shifted and broke to the upside. And right here would have been where to buy in. Everything had shifted to the upside. You had positive momentum. All the momentum indicators had shifted. You're getting through some moving averages. So in this particular trade here, the first thing I will do is I'll do a basket of various trades. I'll sell a bull put credit spread. I'll buy some 60, 70 delta calls, and I might look to buy some other lower delta options, and then try to see if that trend develops, which on this particular example it did. On this particular time frame, I actually went out and bought leaps. I bought the January 2015 leaps on USO. So a lot of times I'll trade using USO if I see that there's a potential for a nice longer term trend. So that's what I did on this particular trade. I bought the USO leaps, and then you can play those. You can sell against them calls and stuff, and make it a like a diagonal covered call using the leaps. So that's crude oil. Now let me see. One of the big high flyers lately has been Tesla and QIHU. I've been playing QIHU a lot. Let me show you that one. So here's QIHU, and it's been a really nice one. It's been in a squeeze setup. So see here, so what I like to look at are multiple type squeeze situations, and you can see here that this is on a weekly time frame, and you can see it started a compression squeeze way back here in December, and currently starting to break. It just triggered off the weekly, so this is a very strong stock to play. If you're looking for something to trade, even if the markets are weak, QIHU is a very strong powered stock right now. So it's just triggered on a weekly, and usually these squeeze type setups will last for 4 to 5 bars. So there's your weekly squeeze triggered. See the daily squeeze triggered right here. So that was on the 18th, and I was long some options in here, and I took profit, the other day when it got up here. But this is still a good one to follow and look to buy on pullbacks. So the daily squeeze triggered. It also had what I like to do then is look for an hourly squeeze, and see the hourly squeeze here. Now this is probably I'll probably look to maybe put something else on here today. What I'll do is I'll probably do a bull put credit spread, because that way, even if I don't get the timing exactly right on the breakout, I can still profit, even if I'm wrong exactly on the timing. But this looks good for additional break out above this 108 level right here, because now we're in an hourly squeeze and the indicators have shifted back up. So that looks very positive. So I like the looks at QIHU, and we'll probably do something here later today to see if it's still sitting here. I'd probably look to do a bull put credit spread, and I'd probably go out to I might even look at for tomorrow expiration, or go out for next week's weekly options. So I like to trade the weekly options, so QIHU has weeklies. QIHU. So, you know, I'd be looking for, so it's trading at 105.98. There's probably not a lot of premium left now since you only have one day. So this could be an interesting trade. You can buy some really cheap calls actually. So let's see, we're trading at 105. Now the thing to also look at is see if there's any major open interest at certain levels. This could be an interesting trade. Let's look at here. So pull up open interest and look over here. What do we have? We've got at the 100 strike, we've got some good open interest on both the puts and the calls. And then at the 104, nice open interest. So we're currently trading at 106. So, and also on the 110 strike, there's some good open interest. So, you know, low risk trade here. Of course, your theta decay will kill you, but you could pick up some, you know, 110 options, you know, for probably 45 cents. And if this thing breaks hard, you know, and breaks out tomorrow, those things could really pay off. Let's see here, one thing on that. And those are the 110 options right here. They're going for 50. Now see the problem when you buy these though, if it doesn't do anything, that's gonna decay by about 30 cents just if it sits there. So tomorrow, if it goes nowhere, these options will be worth about 20 cents tomorrow on the open. So a couple things you could do is you could either take the shot at, you know what your risk is, 50, and if this thing does have a hard break going into the close today and it falls through in the morning, that could pay off. Or you wait for the morning and watch these 110 calls, and you can probably pick them up for 50 cents or maybe even less. So that's something to look at. Now I want to show you real quick Priceline before I run out of time. So let's look at Priceline. Today it's got its earnings coming out, and I'll show you an earnings trade that I'll probably look to do here today as well. And I think do I have only 4 minutes left? Okay, here's Priceline, because I wanted to pick the raffle winner. And also, if you're interested in my earnings course, I'll give you that link real quick as well. Hold on. My earnings course will teach you the different option strategies that I use for earnings. And if you could put powercycletrading.com/earnings in for everybody to see, I'd appreciate that. I can't seem to get it to, okay, the scanner, I'll show you that too. Yeah, put in powercycletrading.com/earnings. And then I'll show you the scanner, and then I'll show you a quick setup on this Priceline. Oh, I see. Okay, here, I think I got it. Oh, okay, finally got it. Okay, so there you go. It's a $97 course, but it'll show you some really great earning strategies. So here's the scanner real quick. Then I want to show you this earnings trade. Okay, so the scanner, you see that? Okay, so the scanner, you can put in whatever you want. This is also on Thinkorswim, and we've got the scanner based on the trading model. So when you see a green in here, that signifies a compression squeeze. And if you see like here a minus, that means that the potential is for it to break to the downside. If you just see a solid green, it means potential for it to break to the upside. And then we can do this on anywhere from a 1-minute time frame all the way up to monthly. So I can come in here and look down, here's your weekly, 4-hour, daily, 60-minute, 30-minute. I can look for things that are in a squeeze. So right here, Just one quick one that stands out is Microsoft, which I don't usually trade because it doesn't go anywhere usually. So that's in a squeeze. And on a weekly, let's see if there's anything else. Here's one. That's on, I think that's Baidu. Let's see here real quick. Yeah, Baidu, I'll show you that. Baidu's in a squeeze on the weekly, so we can pull up Baidu. So here's Baidu. Yeah, that Tesla worked out really well for you. So you sold it. That worked out great. So here's Baidu. You can see the weekly. See it's in a compression squeeze, and here's on a 1 hour squeeze. So Baidu is something to put on your watch list. It could be, it's going to have earnings here in about a week though, so it could just sit here. So there's Baidu. That looks pretty good. So there's Baidu. Now let's get back to Priceline real quick. I'll show you a quick trade. Now you can do, somebody just said they did an earn condor on Tesla. So a couple different ways. What I like to do sometimes is just do what we call a short earn condor, and it's one that you don't have to do a lot of management on, and you're basing it on price. So real quick snapshot here. Tell me if you're going to have to type to let me know if I'm running out of time, because I'm just for some reason I can't hear, and I need to also. What I'll do if it's if I do run out of time and I can't here's Yana, and if there's not enough time, I will just select a raffle winner, and then I'll email you whoever wins. I'll send you an email. Oh, okay, good. I still have 30 minutes. Great. So here's Priceline, and so what I'll be looking at here is current price is 12. You can see up here in this right-hand corner, 12.59. It's 1,012.59. Now, what I do is I have I keep past earnings history, and I'll do a little bit of a spread analysis. So here is Priceline. You see this little worksheet here. I haven't done the spread yet, but so don't pay attention to that. But this little table below, what I'll do is I will look back at past earnings. So Priceline, I'll put it in is trade at 12.59.43. So that's where it's currently trading. Now, you can look back. I've got the last 5 earnings down here below, you can see. See if I can widen this out. So I'll do my analysis. I'll look at the past earnings cycles to see what kind of trend these various stocks have. And Priceline, you can see back in November, it was trading at 1,022. The implied move that the market makers were saying it would move after earnings release was over 6%. And you can see in August, the implied move that the market makers were saying was 6%. At that time, it's trading at 933. In May of last year, 6%. In February of 2000, this should be 2012. 2012, price was 678. They were calling for a move of 8%. And then back in November, they were calling for a move of 9%. So fairly consistent. The implied moves have usually been around 6, 7, 8%. Priceline's a big, highly priced stock, so that's a big move. So looking then, what I like to do is look at post earnings, how it moved after earnings. And here's a 1 day, 3 day, and I'll keep track of that up to 15, 20 days. So you can see last earnings cycle, it moved about 5% for and I'm looking at weekly options, so I don't care as long as it's 2 or 3 days till expiration. I want to keep expiration my trade short so nothing can affect that momentum for this particular type trade. The cycle before that, it moved about 3.8%, 3.7%. So on average, you can say that Priceline moves about 3%. So I'll look at that. Okay. So I will look at, say, then I'll construct the trade based on a 3% move. So if Priceline right now is trading at 1260, and then to figure the implied move on Thinkorswim, it's pretty easy because they'll give you it right here. See that little 7780 right there? That is giving you the implied based on this platform. So what they're saying is that Priceline currently is trading at 1259. So you want to put these trades on as close to the close as possible because you want to get close to the price, because this trade is going to be really based on price. This particular trade is going to be based on price movement, not on volatility collapse. So the closer you get to the price at the close, the better for this thing to perform tomorrow, one day. So all I want to happen on this trade is I want Priceline to go up over 3% or down over 3%, because the normal implied move has been averaging about 6%. So I'm going to take half of that and see if I could construct a trade. So if you look at currently, we'll say Priceline's trading at 1260 right now, and the implied move they're calculating is, we'll call it $78 plus or minus. There are a number of ways to figure the implied move, but one is, well, basically it's the straddle cost, if you're familiar with that. And so this would be pretty much precisely the straddle cost. So $78 we'll say, and it's currently trading, we're going to use 1260. It's trading at 1260. So that's a 6% move, see, 6.19%. So that's like all other time frames before, very, very similar. So what I'll do is I'll see if I can construct a trade at a 3% move. So, and if you're interested, go to that earnings course and it'll teach you this in detail, plus the other strategies I like. But this is one of them. And this one's a very easy one to do. You don't have to manage it much. So then I'll look to see, okay, then what is a 3% move? So 3% times 1260, I think that's about $38 times, just do that real quick. Yeah, it's about $38 plus or minus. So what then I'll do is, okay, I'll see from 1260 minus 38, what's my low target? So 1260 minus 38, that's 12, we'll call it 1222. We might have to round that up or down. So that's the target low for this price if it moves 3%, greater than 3% to the downside. It would be under 1222. We might call that 1225 because there's not a 1222 strike. And then to the upside, 1260 plus 38, that's 1298. And we can call that either 1295. We'll just see where the strikes are, or 1300. So then I'll just see what I can get out of that spread. So, and I'll refine this a little bit more when I have time, but I'm just going to go through here and show you. So right now it's traded at 1260. Implied move, the market makers are saying is around $78, and we're going to use half of that. We're going to use 38. So I'll go down here and I'll see where those are. So we calculated here that the low, based on a low implied move, well, a 3% move to the downside would be about 1225. So I would look here, it's going to be either, I'll use either the 1220 as the downside because it came out to be 1222. So I'll use 1220 to the downside. That'll be my downside target. And I'll use 1295 on the upside target. We'll just see if the numbers work. So you got to do a few little trial and error calculations. So this is my downside target, 1220. So I want, based on a 3% move, I want Priceline, if it was to close right here around 1260 today, then if it moves after hours and tomorrow into expiration, if it closes below 1220, I'd be at my profit target. So I'm going to do just a put spread, 12.25. 12.20 put spread. It's a $5 spread. It's a $1.85 debit. So this looks like it'll probably work. And then on the upside, since I want it non-directional, I don't care if it goes up or down. I just want it to go up or down over 3%. So on the upside, I'm going to use, my upside target was $12.95 right here. So I'm going to do the $5 wide spread. I'm going to buy the $12.90 and sell the $12.95 call spread. Yeah, and this looks like it works. So I'm going to write that down because I'll probably watch this going closer to the close. And if I can get in, the one problem with Priceline, the bid offer spreads can be pretty wide. So, you know, you see it here theoretically, but you might not be able to actually execute it. So that's the only problem. But this shows you. So this looks like it would work. 12.90, 12.95 call spread. Then it's the 12.25, 12.20 put spread. That is going currently, if you could execute it here, at 375. So right here, my max profit would be $125. We've got a $5 wide spread. The cost here you can see is 375 on the debit. So 500 minus 375 would give you a potential profit of 125 bucks if it either closes below 12.20 tomorrow or above 12.95. So that's one way to trade these. In this particular type of trade, you don't have to do a bunch of adjustments. If you're selling volatility, it can, you know, it can be pretty wild. They can go all over the place. But you can see the implied volatility here is 107%, and the normal implied vol is probably 50. So this is one particular trade I like on stocks that can move really hard, and you know, it's one that you don't have to really manage and be watching that much. So this particular trade, if you could get it done right there, you know, that's a 33% return on your capital. You know, your maximum risk is 375. So that's something I wanted to point out. I'll probably be looking to do this at the end of the day. So that's done. And then somebody wanted to look at the scanner, wanted to see, let's see here, what do we got? The yen. Okay, let's see here. So I'm going to pull this out. Is that helpful? Anybody trade earnings here? Saw somebody did a Tesla trade. Your Tesla trade really turned out nice. Let's look at Tesla real quick. Yeah, Tesla, that was nice. See, Tesla spiked to 225 and then just got crushed. So the trade that one of the guys said he did earlier was based on a volatility collapse. So he did really good on that trade. So let's see here. I'll just show you the difference on the implied volatilities real quick too, since we had that up. So you can see here, this is Priceline. So the vol is cranked up to 107. The normal vol is about 30. There's usually about 30%. So you can see how extreme it is. So, you know, there are two ways to play these earnings trades. You either do a option trades based on selling the volatility, or like I just showed you, you do one based on a big price move. So two different ways to do it, and both can do quite well. Let's see here. So the next thing here, somebody wanted to see the scanner again. Let me pull up charts. And I don't really trade currencies much anymore. I used to do a lot of currencies, but not much lately. But what I'd like to do is follow the yen for market direction. So right here you can see the yen. This is just the yen futures, and this is a key index or underlying asset to watch, because it can really influence the broad markets big time, because there's so many trades put on with yen, carry type trades. So somebody might be short yen, long the Nikkei, or short yen, long gold. Just various things are interconnected with it. So if, as a trader, this is one thing to always follow is the yen, and also follow bonds, because those are highly correlated. So if they're going extreme one way, usually the U.S. equities are going to be going the opposite way. So just taking a look at yen, the big trade last year was short yen. Yikes. Hold on. The big trade last year was short yen. And right now, it's creating a little bit of havoc because some of those trades are being unwound. So here's yen from last year. So you can see here's a compression squeeze last year. I mean, Soros, all these guys, the big currency traders, made just killing on the short yen trade. Short yen, long dollar, short yen, long equities, short yen, whatever. So here is just a great example of a compression squeeze. And if you've been a yen trader, this would have tipped you off to potentially a big breakdown, which it was. So you can see how it just got crushed. Now, earlier, first of the year, see how it started going sideways? And then look, you got a compression squeeze here based into January, and it broke out. So when it broke out here, what did the equities do? They came off hard. So keep an eye on yen. You can just watch the yen futures, and it'll be a pretty good little indicator as to potential things to come. Now right now it's in a squeeze again, so we don't know what's going to happen. But if yen right now, directionally it looks like it might roll to the downside. You see the momentum has shifted down. My momentum indicators are down, and if yen continues back to the downside, then that's going to be a very positive correlation for U.S. equities, and you'll get a nice run back on the equities. There's no difference. It's just a matter of how you use your indicators for that squeeze. There's nothing really proprietary about a squeeze. It's just certain things, components create of your indicators are used to make that squeeze, and so we've got that built into this, and it's taught in my trading course. So you can, if you're a lucky raffle winner, it'll teach you how to set that squeeze up. And if you're not the lucky raffle winner, go to my site powercycletrading.com, and you can sign up with one of the courses that gives you all the videos and it'll show you all this stuff. So keep an eye on yen. So if it does start breaking to the downside, that's going to be a good indication that the equity markets could start taking back off to the upside. And then the other one you want to keep an eye on, are bonds. So bonds, really have kind of been sitting too. And here's the bond. This is a 30-year Treasury, and it's also in a squeeze. So the markets are going to do something, and it's going to, they won't stay sideways. Markets tend to go sideways, 70–80% of the time, and then they break. So right now, bonds and yens, keep an eye on it because they're both in the squeeze, and if they decide to trigger down, then you want to jump on the equities. If they trigger back up, then you want to be out of equities, risk off. I guess you could say risk on, risk off. So those are two things to look at to help you, looking at the big picture. So let's see, something else. Let's see some other questions here. Okay, somebody's asking from a short-term trading point of view, what does your analysis tell you about Tesla direction into the close today? Okay, let's pull up Tesla. Everybody's loves Tesla. Tesla's like Apple was. Okay, so let's just go what I call top-down market analysis, and we'll just use the daily and 60-minute, 30-minute. We'll just go down the time frames. So earnings came out, obviously, had a nice pop to the upside here. And the other thing too is to look at what I like to do is look at past earnings performance and see if a stock trends in the direction of its earnings release. And if it does, these can be good post-earning type trades. So if you look at Tesla, the last earnings trade right here, what did it do? It got crushed. But look at the trend. Trended nicely. Now let's go back a little bit further. So if you can do a little homework and see these stocks, what do they do after their earnings release? And if they trend, then these are good trades to get onto for a longer term trend. Okay, so here's another earnings trade on Tesla. This was back in August. So what did it do? It bounced up like today. It pulled back. It held the main moving averages. And then what did it do? It just trended. So a nice trend there. Let's go back even further. And look, here's a compression breakout. Tesla really, when you get these really tight patterns and you're in a squeeze and you get your indicators telling you, you know, it's going to maybe break to the upside, these are the ones to put on. Here's the other earnings trade. This was back in May last year. So what did it do? Popped to the upside, and look what it did. It trended. So Tesla, I mean, just looking at past history, it's a good one to go with the trend. It doesn't mean it'll happen every time, but the probability is telling you that this thing trends after earnings in the direction of the earnings break. So on Tesla, what I'd be looking for is for continuation trend to the upside. Doesn't mean that, you know, tomorrow it can't pull back. So the question was, what do you think about tomorrow? But in general, Tesla looks good for a trend up further. So, you know, just plan your, you know, entries accordingly. But the longer term trend looks good based on past earnings, you know, and trends. So you can see this past earning, it trended for from November and didn't hit a bottom until the end of November. So markets tend to go, you know, two to 3 week cycles, you know, 15, 20 days, and then they change. So look for Tesla to keep probably moving higher. Now the next thing I'll do is I'll shift down to the next time frame. So I'll go down to the 1 hour. So if you look at the 1 hour, the indicators have turned over. We're into a trend line here. So right now, you've got support right at 205. Here's your 50 moving average, and you've got this kind of price action right here. So you've got support at 205, and it could easily pull back here to 205. I think 205 will probably hold. Now the next thing to do is look at your open interest to see what that looks like. So that's on the 1 hour. So I'll be watching that 1 hour time frame. The momentum's gone negative there. So it looks like it could drift lower from here. 30-minute though, it's starting to shift back up. See? Engulfing bar there. So if it can get back through, so right now it supports at about 205, and then your resistance is going to be about 215, this trend line, and then 218. So those are key levels to write down. Now the next thing I'll do is I'll look at the 15-minute time frame. So see how it's starting to flatten here? It's starting to consolidate. So if it can consolidate here and hold this 205 kind of area, then it could easily be back up here to 218. And then I'll go down to the 5-minute time frame. And in the 5-minute time frame, nice, you've got a piece going on here. So if this breaks back up, if it breaks here, it's 210. You should jump on, but I'm not going to say you. If it breaks this squeeze and triggers the upside, this could be a really nice day trade. So directionally, if this thing gets rolling and gets back above this, say a 211, then you got a shot at 217 again in this, out of this compression squeeze. So it looks pretty decent to the upside again. Okay. No, I would not do a bear call credit spread on Tesla. I mean, it'll rip your face off. I'd do a bull put credit spread, but I wouldn't do, I mean, that's me personally. You could be totally right, but what I'm seeing here is that if this thing breaks, it's going to be back at 217. So you're you know, you're saying sell the 217 and a half, 222 and a half, collect 65 cents. Well, it's pretty good credit, that's for sure, but and that's the high of the move. So I understand your logic. It's not a bad idea, but just be ready to defend it, right? You know, Tesla is, it's just crazy. But that's the high. So what happens, you know, if this thing may not break up there, but if it does, you know, it's going to most likely push to that high, and then you're going to be like, holy molies, what am I going to do now? And so then you have to think, okay, do I defend it? Do I add more credit spreads? Do I buy a debit spread? You know, all that kind of stuff. So Tesla, just look here real quick. It's the monthly option expiration. Thanks, Paul. Okay, so one last thing. Let's just look at the open interest real quick. Pull that up. Yeah, see, you've got a lot of open interest here at the 215 strike. Wow. And then you've got, yeah, I wouldn't see all the open interest, the 220 strike. This thing could just, it's just a vicious animal. So, you know, check your open interest. See, 220 strike, 5,000 contracts. Now, this could be a good trade here. Possibly, I might look at this actually, do a butterfly. Yeah, I'm going to look at this trade probably after I get off here. A butterfly, if you know how to do a butterfly, using the 220 as your pinning. This is a pinning trade. So let me write that down. So that's a trade. If you like options, you might take a look at that. The 220 butterfly on Tesla. Low risk, very low risk trade. All right. So that being said, let's see. Let me see here. I can pull up. Now, also my earnings game plan course, if you're interested in that, it's a great course. And it's, you know, you should be able to make this, hopefully, the cost of your investment back in a trade. So here's the link. And you get a lot with this course. And, you know, we're getting into some good earnings. There's still some really good earnings trades to come. And this thing is $97 plus. It's a course I had, so it's recordings and PowerPoints and everything. So that's something I wanted to make sure you guys were aware of. And then the raffle, see if I have time to find out what's going on there. Let me pull something else up here. So this is, oh man, got too many things going on at one time. Sometimes it's hard to stay focused. Okay, so here is the earnings course. So you just go to powercycletrading.com/earnings and you pick that up, and it'll teach you all these strategies with lots of examples. And oh, Tesla, just watch that if you're a day trader and you want a possible good trade, watch the 5-minute time frame. If it breaks at 211, which somebody said it just did, you could get that thing to 217 pretty fast. So keep an eye on Tesla. And then look at the Tesla. I'm going to look at that 220 butterfly. That could be very interesting. And anyway, it was a lot of fun here today. I appreciate everybody coming, and it's always appreciate everything Morgan does. And super good guy. And is Don here? Kushner? Don Kushner? Are you here, Don? Okay, good. Don Kushner, are you here? If you're here, raise your hand. Okay, great. You just won the raffle. And so if you could make it easier for me, just send me a email here. Send me an email just to remind me, and then you can pick the course you want, and we'll get you all set up. Well, fantastic. Thanks again, Morgan. Another great outing. Appreciate everybody's time today, and talk to you on the next event. Ciao.